Let's see, are we working? Are we working? Hold on. I don't see the video. There we go. There we go. Let's see, good morning, guys. All right. All right, here we go. Take a look at the disclosure. Compliance is on me. They say I got to list this every single morning. What up, everyone? My name is Scott Redler, Chief Strategic Officer of T3Live.com. This is the 6:30 Club. It is June 14th. It is Tuesday. We have the PPI today. We have the Fed tomorrow. We've been down hard the last 3 days trying to figure out how to make some cash flow, how to keep your mind clear, how to just advocate all your or adjust all your time frames. You gotta have patience here because this could go on for a little while, so you want to make sure you're level-headed and prepared. That's why I try and let you guys know what to do. Somebody requested a song that's a little uppity because people are feeling down. I don't know if you remember this song. I Got the Power from back in the day because you know what? You do have the power. You have the power to control your keyboard. You have the power to control your process. You have the power to do whatever it is you want to do as long as you're thinking clearly and you're not hiding underneath your desk, and that's not what we do. Don't hide on your desk. Don't close your eyes. Don't hope, don't pray. Take friggin', just take control of what you're doing and learn. And I think a lot of guys are doing pretty well. It's the ones that, listen to others and not trying to learn that are getting caught up in this mess. Anyway, let me say hello to some of my dogs around the world. What up, Cowhand? How you doing? You know what, I was just talking to my friend who's been in the market literally for 40 years, one of the most successful hedge fund managers in the world, and now he just manages his family business. And I asked him today, I go, they're floating around a 75 basis point raise. I'm like, in my mind, I feel like that means that they want, let me put this up while you guys are listening to me. In my mind, that means that they need asset prices lower faster. That means they need the stock market down, they need oil down, they need everything down to kill inflation. So although some think, that might give some credibility to the Fed, and get a knee-jerk reaction higher for equities, come tomorrow, ultimately it means that we have a long way to go and we could still see lower prices on a macro stance. So I'm going to go over different time frames and different ways to navigate because we all navigate on different time frames, right? What up, Connecticut? How you feeling, Barry? Good to see you. All right, so I wanted to give you a few levels first. Strawberry Moon, right? What up, Mexico City? What up, the Big Cove? What up, Maine? This wasn't exactly the song that I wanted, but it's good. It's nice. Let's get going here. All right, so what up, Jack? How you feeling, my friend? All right, so here's the thing. You have the Fed tomorrow, and you just had 3 harsh down days. Sometimes they do rally a little bit into the 2 o'clock news, especially if you're oversold. I was reading from my friend Steven. He sent out a stat sheet on how if we're down on Monday after a 2-day decline, you get some kind of turnaround Tuesday. So for those of you who trade actively for cash flow like I do, you don't need to really worry about what's going to happen in July or August or September or the fall yet. We need to worry about how do we make money today and potentially tomorrow, right? And then you have to also think about, like I think about because I have long-term accounts, where can I take advantage of all of these, these declines because you're starting to see a lot of comparisons. Oh, the worst 3-day move since 2020. Biggest move lower in tech and high growth since 2007-8, da-da-da-da. So when all that kind of stuff gets out there, that means there's a lot of pain out there. But for those who've been planned and those who have high levels of cash and those who are strategic, that's how money is made and wealth is built, by embracing what people are forced to sell and you're able to hold because you're not spending too much money, your nut's not too big, you're not over your skis, and you're strategic. And that's why I try and make everyone from the Alpha team, to Redler All Access to, my dogs over here in the 6:30 Club. So anyway, this is the chart of the Qs. So this is really just for the, everyone talks about, oh, you're a prop trader, you're a day trader, this and that. I listen to everyone on TV. Everybody friggin' navigates actively for cash flow. There are guys last week, besides Kramer, who said everybody buy everything you can up here and never said another word since, there were guys who were thinking, hey, maybe we get a little bit higher, but then I don't know if they adjusted on Thursday the way we did. Last week, you had this inside range. I bought calls just in case we went higher and puts just in case we went lower. And obviously my calls went to 0. My puts went from like 2 to 8 or 15, so they're more than covered it. So we made a lot of money with options and was able to tactically get short. But you listen to some of the guys on Fast Money, they talk out of both sides of their tushy, even though I'm friends with some of them. But anyway, so if you look here at the Qs, this is what I'm thinking about. Okay, you have 274.53. That's yesterday's low. At this point, we were higher pre-market. The futures were up, but Europe didn't really respond so well. Asia's kind of mixed, and we still have the PPI, which is the producer price index, coming up. So the market's probably a little tentative. How deep in the grains of the economy is inflation starting to go? And the PPI tells you that. So if we get a hot PPI, chances are we're going to open below 274.53, and then we'll see, does it stay below on day 1, 2, 3 down? I actually really like day 4 down. So it will be hard to press. If we get hit on the PPI, I would not be pressing that short because the oscillator is already like plus 55 and you have the Fed tomorrow. Probably not the time to press. The time to have pressed and made a lot of money as an active trader was right there. That was your time for the SPYs, the Qs, whatever it was. That was a great trade. Even for me, who people think I'm a perma-bull. I'm not a perma-bull, but social media has been more prevalent the last decade. In the last decade, it's made a lot more money being long than short. I have both approaches, tactical and a portfolio. I haven't been in portfolio approach for more than a week and a half, and that was March this entire year. So I'm sitting and ready to go. So is my community. And as far as long term, I have 25% in, which I'll get in, and I'm waiting, patiently for lower prices as well. But anyway, for today and tomorrow, the question is, this is 280.20, which was the prior low, which was right there. This is yesterday's candle, 274.53, 282. So I think there's a decent chance that between now and the Fed conference, whatever it is, that they're going to at least fill this gap. Like at some point, either they're going to be testing this gap pivot and fill it. I just don't know, when. Sometimes they do it pre-Fed, sometimes they do it post-Fed if they do 75 basis points, or maybe we do get a reflex rally to fill that. I don't think we're going to get up to here. This gap's probably going to stay unfilled for quite some time. You also have a big quad witching. A lot of people saying there were a lot of puts, so they want to make sure those go worthless. So, for today, at this point, the market's very, kind of quiet here. Even with Oracle's pretty good news. You have the Qs right now are right here. It's 277.35. So we're not even at 280.20, which was the prior low, which yesterday was resistance many times. And then yesterday's high, and then you have a 6-point gap fill. So right now we're at 277.30. We're right in the middle here. So if we just hang here, we might just have an inside day as we wait for tomorrow. So if we just have an inside day, what does that mean to you? Don't overtrade. Don't give the market makers your money, by overtrading things that aren't working. But there is a chance that between now and 2:30 tomorrow, we try and fill this gap, or not. We break below and get below 274.53. That thought's over, But again, it's only 6:39 on Tuesday, and the Fed doesn't go till tomorrow, and we still have the PPI in front of us. But everything has this type of gap. But write down where it gets into the gap and where it gets filled, and what has to happen, between now and then. If you look at the SPYs, it's very similar. Okay, the SPYs have 373.30. That's yesterday's low. That's your market discovery. That's your point of reference. That is all you know. Some people are saying we have to go to 360, 355, 340. Maybe in the next month or 2 months, as corporate profits might be horrendous, but Oracle is saying not. But 373.30 is that pivot support now. Where is resistance? 380.53 was the prior low, so that is resistance. That is where we got rejected a few times. And then here is this gap. Okay, and then here's the gap from Friday. This one, most likely, in my humble opinion, doesn't get filled for a while. But this one might. Okay, so if you're looking for active cash flow, you don't want to short too fast. And you want to, if you're going to be tactically looking long, you want to kind of have a roadmap of where your inflection point buy is and whenever that point is and where it can go and how you can make your money there. So this is a SPY. So that's actively very short term. Then some guys are like, okay, Red Dog, let's talk a little longer term because I don't tactically day trade. I just want to kind of know where in my cash account I could put some money to work. I'm like, well, you know, if you go to the weekly chart, which I've shown many times, okay, thank goodness I kept you guys at bay because I showed you guys in 2018 the S&P was down 20%, and I showed you look at the size of this friggin' move since the pandemic when they overflowed the entire system with cash everywhere, which they had to do at some point, but they kept doing it too far. So I'm like, look at this head and shoulders top, because everyone's like, what about your wife's cash account? You know, it's in full cash. What are you doing there? Here I put it, you know, 2 tranches to work. Here I put only 2 tranches to work. I made good money. So when are you going to do it here? So I waited here until about 17% off the highs. Okay, now what I'm waiting to do, which might happen or might not happen, I'm waiting for 360-ish to put 25% more in. So that means 50% of her cash account, her blood in the street account will be put to work. And then 340-ish would be another one if we get there. So again, we're talking, it's June 14th, we have July, we have August, we have a big summer in front of us. Hopefully you'll have some fun at the beach, you go in the mountains, you'll sweat out a lot of whatever it is you're taking and ingest. Right now we're just ingesting an iced coffee, but be patient. You know, it's a very tricky time, but I already put in 1 tranche around here and I'm waiting for this and maybe that. But short term, hey, does this gap get filled? We shall see. But again, look at this head and shoulders top pattern. All we did during this oversold bounce is retest the 415 area, and then once we broke 407, that was a nice little short area. You know, you can look at very similar patterns across the board. I showed you this in tech. You know, so if you want to follow some of the leaders, okay, you know, Apple did the same thing. Apple, you know, you want to look at today. Apple did. It was kind of tricky yesterday. In the morning, Apple and Microsoft showed a little relative strength, and as I said, hour to hour, these things don't have muscle memory anymore. Then all of a sudden, as the day progressed, you know, you would think you know, Apple and Microsoft were decent, and then all of a sudden they just rolled over, and you know, and they lost their little relative strength. So if you're looking and you're playing micro, you have to see when things change a little bit. But anyway, you know, this is 131.44. This is 132.60. So for right now, what's Apple doing? I think it's probably, you know, it's not like Apple's up a whole 92 cents. So again, these things are kind of no man's land. 132.80, it's a little bit above 132.60. It's below what this gap pivot was. So you want to write that down. What's this gap pivot? This one is, this is yesterday's high, 135.20. So all morning long, by the way, once I'm done with this, I mark up every little pivot point, every little chart, and I post about 40 charts to Redler All Access and the Alpha team to get them prepared to make cash flow for the day and get myself prepared, because I am a trader. I make money quarterly. I don't go monthly, I go quarterly, you know, and that's where I make the majority of my money. So all I do is prepare myself, and at the same time, I have enough ADHD and I have so much things going on where every second counts. I could put my game plan out to my community because I'm trading Apple and the Qs and the spiders and Amazon and this and that, and you know, so you know, it doesn't affect me if you make this money the same way I make. If anything, I welcome it. So here's 2 gaps in Apple also. So all these things look the same. So some people are like, I'm going to be trading 10 things. I'm like, you don't have to really trade 10 things because every pattern looks similar. You know, trade the spies and the Qs and look for clues maybe from Apple, you know, Microsoft, Tesla, Amazon, etc., etc. But anyway, you look at this and everyone's like, oh, look at the size of this decline in Apple. I'm like, yeah, but if you go to the weekly chart, you know, you don't want to start too fast. In the weekly chart, to me, Apple seems like it can get down to like 118-ish and 110-ish. If the S&P cash is going to 3,400 this summer, like what's his face from Morgan Stanley says, Wilson, Apple's going to probably be close to 110 or 118. So, you know, again, are you putting longer term money to work, or are you trying to trade actively for cash flow? You have to think about that. Same thing with Tesla. Tesla, you know me, I've had a bromance with Elon for years. I have a bromance with him when we're above the 820 one day. When it's above the 820 one day, I love it. There's momentum. He's so smart. He's so funny. When Tesla's below the 820 one day, he's a little eccentric, wonky, and he should shut the hell up. No, I'm kidding. But anyway, you look at Tesla, you know, Tesla also seems to me that obviously this is when it lost special status right here, 974, when it broke the 821 day. It's been below since. So all it has been is a two-way trade. Everyone's like, Red Dog, when are you going to sink your teeth into Tesla again? I'm like, I sank my teeth into Tesla here when it was special in March. That's what made my quarter. But since then, you had a high, a lower high, another lower high, broke this spot right here, this upper quadrant. So that made it not special. Then we broke below here and retested and failed. So to me, Tesla can get to the low 500s. If the S&P is going to 3,400, Tesla's going to 502. But for today, you go back to the daily chart. The question is, will Tesla break 620 or hold 644 and try and rally back up here? What's Tesla doing today? Tesla is, it's up 8. So 655. So it's right in the middle. So another thought is, okay, do we just have an inside day today as we wait for the Fed tomorrow, which would make sense? Or, we have to obviously wait for the PPI at 8:30. Bowler maker, what are you saying? You're in? What are you in? You in the market? You in the water? Anyway, so IBM's been really strong. IBM, I talked about that with you guys, saying, hey, if you guys, trying to put some money to work, on a macro basis, it's not going to run away, but but there's a time and place short term too. Remember this doji right here, traded below, right back in the range. Still a bunch of choppy messes here, but if you look at least on the weekly chart of this, you'll see that, or actually go to the monthly chart, it seems like IBM, is trying to get above this downtrend, and at least it's not, making lower lows like some of the names that have acted really well in the last 5 years, like your Amazon and all those things. But anyway, you bought a little Tesla for the grandkids? I'm sure it'll be okay. Unless Ford, GM, and all the friggin' other big boys who manufacture a gazillion more EVs than Tesla, start to get better valuations. But talking about that, it's crazy. People like Red Dog, how did you know to get out of Ford? How did you know to get out of GM? I'm like, because I use charts. When who is pumping Ford again and GM and this and that, look when you could have got out of Ford. I haven't traded Ford in ages. Remember this? We were in Ford from like 1370. Same thing. You had your high, and then it was a false breakout and lost the 8-day moving average. So when Ford broke 2430 and then 2435, whatever this was, that was your confirmation sell. Okay, and then it's been trending down ever since. Same way, above the 821 day, Ford, best company in the U.S. Once it breaks the 821 day, little prehistoric, not as innovative as Tesla. But that's just, any talk. But anyway, again, trends. Above the 821 day, you could sit in a swing trade and massage it if you want to make money tactically. Below the 821 day, you try and play it a few times, and it's just been trending down. And look where Ford is, back at 1181 round trip. Ford, GM the same way. It's not just Kathy Wood's names. It's not just, AFRM, which is another, look at that. Look how AFRM was above the 821 days this entire time. You had your Red Dog reversal top. You had these two drastic bars, and then the lost 821 day at 149. 149 you could have gotten out of the way. And it's pretty much been below all the way down to 21. That's painful. That's why, it's like, holy cow. Some of Kathy Wood's names look like altcoins in goddamn crypto. Gold. I have a lot of friends on Friday like, Red Dog, you got to buy gold. We had such a good play. Remember, what was it? In February, you were in the big call spread for gold, and, we made a lot of money, 200-300%. Look at this engulfing bar. I'm like, what? I just don't want to be in gold. This is when we made a lot of money in gold, and then look what happened. This is just gross. Like, this is a nice candle, like a really nice candle. Now I know why everyone was on me. Red Dog, buy gold. Red Dog, buy gold. You get out of it really well. And then that happened. What a friggin' trap. What's gold doing today? Gold is down 13 cents. And I'm like, what? If crypto is getting taken to the woodshed, look, gold is an inflation hedge. I used to always have fun with, what's up, El Dorado? I used to have fun with my friends that love gold for the end of the world. I'm like, what? Give me a 6-pack of IPA and a pizza. I'd rather have that at the end of the world than a bar of gold. Maybe I could use the bar of gold to hit it over someone's head and steal their pizza and Sam Adams. But anyway, some guys are like, did Bitcoin find its low? all I know is I've been out of the way, and a lot of my friends have been so happy because, Bitcoin also, but that's not Bitcoin. Bitcoin has been trading perfectly with technicals. We've given so many different ways to get the hell out of the way with Bitcoin. Okay, right here, okay, is when I put a sell. I said at this point I'm in 75% cash in my Coinbase account and my KuCoin account, and then from 63,000 all the way to got cut in half. Yeah, I did put on some trades and made some decent money, and then right here was kind of a breakout failure. If you remember, I'm like, guys, if we break 40,000, it's in trouble. And then if you remember last week, you could check the charts that I posted. I'm like, we break 29, we can at least test 25.3, if not lower. And now if you go to the weekly chart, we kind of just tested this area. Actually, not quite. Okay, I actually had bids in between 20,000 down to 17,000. We didn't quite get there. But again, at this point, we'll see what happens. We'll see what kind of bounce. Maybe now does it bounce back to 25 and then head back lower? I don't think that yesterday was the low in the S&P cash. So chances are this 20,000 is not the low in Bitcoin, especially if we're going to go to 3,400 on the S&P or 3,200. The oscillator, it went out at minus 49 yesterday. So that means now with the futures up a little bit, it's probably minus 40. So it's not really that oversold. Market was more overbought a week ago when everybody on TV was like, oh, now we're ready for an oversold bounce. I'm like, what are you guys talking about? The guys on TV were saying right here, right here, especially friggin' Kramer, oh, now it's time for an oversold bounce. I'm like, no, the oversold bounce was from here to here, okay, which was about 10% off the lows. Now the oscillator, I was actually talking my own book because I was actually short some spies and stuff. I'm like, now here we are. I'm like, do we get another move to 427, which would be some follow through to this existing bounce, or do we fail? That's the terminology, not, oh, are we ready for an oversold bounce? That was the title of major networks. I'm like, you guys are, I'm like, that's why friggin', the media, or not the media, average investors getting crushed because, the media sucks investors in at the wrong time and, whatever. But then it's their fault. They push their own buttons. But anyway, do I use EMA or SMA? Usually SMA, and sometimes I use a blend, but it's really just, an area. And this was an area whether you use an EMA or an SMA to get the hell out of the way. So, to make a long story short, everything, like everyone's like, Red Dog, look at Amazon. I'm like, okay, look at it. It had a 25% move off the pre-split excitement. They should have done their split when earnings were strong, when we were in the pandemic, but Jeff and Mackenzie were too busy selling their stock after blockbuster reports. So this was a 25% move. And look at this Red Dog reversal sell as it pushed above 125.61 and couldn't hold it. That was a sell signal, guys. If you Google Red Dog reversal sell, there are some things out there that go over the strategy. You have a buy and you have a sell. This was a sell. And then right here, a lot of people made good money when it broke 120 and got short. Now what? I guess we could see some kind of bounce here off of this 101 area, and maybe this tries to fill this gap. So my thought process is, can we fill this second gap between now and the Fed news, or after the Fed news? I don't think we fill this one, but we could potentially fill that one, and then we figure out what's next. So short-term tactical, we have two big gaps from the CPI, and from today we have to wait for the PPI. Maybe there's a trade between now and the Fed tomorrow there. Today could be an inside day. We also have to see what happens with the PPI. Or we fill that gap, burn off some of the oversold condition, and then we see. And if you're looking on a macro level, if you put monthly money in every single month, just keep doing that. Myself, I have a 401k. I put monthly flows in every single month. I'm 49. I'm going to be just fine when I need it when I'm 65 or 70. Okay, if you were 75 to start the year, I told you in my report that I was the most bearish I've been in a decade. You better adjust to 50% cash. That's different. That means you're living off your money at 75. I said if your kid is a junior in high school, you better put your 529 into cash because it's going to be a tricky year. I don't want you to think you had college paid for and now you only have a year or two. But my son is only 13. He's in 7th grade. So at this point, I'm going to start throwing more money in there because I have 5 years for the market to make him money to get to a certain amount. And if he does get a basketball or lacrosse scholarship, that money's his for an apartment or a house. But anyway, So if you're, 529, you're just fine also. You just have to know where you are in the world of your finances. So with that said, at 6:56, I'm getting a phone call from management saying I'm, doing a little bit too much here today. I also have to get my 40 charts going. I got to start posting everything, and I got to get moving with the Alpha team and with Redler All Access. So I appreciate you guys for tuning in. We're navigating this together. I'm just trying to give you my experience. Been doing this for 22 years. People are like, Red Dog, how are you so consistent and good? I'm like, well, thanks for the compliment. It's because I've been doing this since 1998. I traded through the tech bubble bursting in the year 2000. I've traded through the financial crisis, the pandemic also, and here I am today in my office by myself, getting up at 4:45 in the morning. I already did 500 reps in the sauna because that is what I do to get mentally prepared for the day. And then I put together all my charts. I listen to some 80s rock, dating myself, and so this way I can know what I'm looking at and I can execute with confidence. It's the only way you can have longevity here, guys. And if you want to be part of the community, I welcome it. Email me, scott@t3live.com. I'll send you to one of my awesome trading counselors. Good luck today, guys.